Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Okay. Let me display the PowerPoint presentation. Asian session live market analysis on April 25th between 5 and 5:30 GMT. Even though the market appears in the holiday mode and there are moves happening, so let us track how exactly the moves could happen during the day and also analyze with regard to the type of moves they are done and the initial lows and the highs they are set for the Japanese session. So we will track the market using the live market code page. I will give the link to the same. Okay. I will focus the camera over that of the live market code page. Currently, euro is seen around 1.4560, 1.4562, 1.4526 is the low, 1.4604 is the high. During the start of the day, they made a quick gain from that Friday close and then subsequently made a quick drop, and then again they are just holding in the middle level and slowly firming it up. And in the case of GBP, they made a very nominal swing and 1.6507, 1.6511 are the current levels, 1.6492 below that of the psychological level is being set as the low, and 1.6550 is the high. You come across flat net change. So there is obviously you come across no net change or any significant net change with regard to Friday close level. In the case of yen, it is trading around 82.11, 82.14, 81.80 is the low. A downward stop and was made, and subsequently it has gone up and now holding above that of 82 area. 82.41 is a high. 24 pips positive net change is seen. So you find subdued moves with regard to euro and GBP, and also in the case of yen, there is a small gain showing the USD gaining move for the day. Then in the case of Swiss franc, and it was trading around 87 area and come up, and now currently trading around 88.52, 88.55, 88.32 is the low, 88.73 is the high. We come across 6 pips negative net change. When euro is making about 2 pips negative net change, CHF is making about 6 pips negative net change, a contrarian move, and which is reflected in the case of euro CHF, which is trading below that of the psychological level 1.29. So currently 1.2890, 1.2894 are the current levels. 1.2882 is the low, 1.2913 is the high. 8 pips negative net change is seen. Because euro and GBP are flat, you come across euro GBP is also trading with no net change. So you find subdued moves are happening initially. And during the start, there was a quick upward move and then started making a drop. And afterwards, they are making subdued moves. Then in the case of commodity pairs, USD CAD is trading around 95.18, 95.22, 95.20 is the low. So they are just keeping the ask closer to that of the low. And 95.40 is the high. 25 pips negative net change is seen. And Australian dollar is also showing negative net change. It went up to 1.0774 and then all the way come down to 1.0722, 1.0725, 1.0713 is the 11 pips negative net change is seen. So before that of the majors making the moves, you come across the commodity pairs are making the moves, which is slightly higher when compared to that of the majors, and so both Australian dollar and the Canadian dollar are showing negative net change, indicating the contrarian moves are happening in the market. Because it is after Easter, the Monday, in Europe and some part of the world, the banks are all closed and many of the trading platforms are closed. The volume could be very relatively thin, and there could be still some moves happening in the market. And let us see what sort of moves they could do it. With regard to yen crosses, you find that euro, GBP and yen are showing positive net change. Nominally, you find a nominal net change of positive net change is seen in the case of yen crosses. So, euro yen is trading around 119.59, 119.63, 119.14 is the low, 120.01 is the high. 36 pips positive net change is seen. GBBN is showing about 45 pips positive net change, trading around 135.61, 135.68, 135.17 is the low, 135.92 is the high. So a wider spread is seen in the case of these two yen crosses because of the contrarian moves. They are showing it in the case of Euro GBP as well as yen. Then on the other side you come across commodity pairs like Australian dollar and Canadian dollar showing negative net change as a contrarian move. Now we'll go back to that of the PowerPoint presentation and see how exactly they are expected to make the moves for today. Keep in mind there might be a holiday thin market, so the moves may not be very big, and tomorrow onwards they are expected to make very aggressive moves in the market. So let me explain to you what could be the possible moves today. Open high, then swing and slide, or the expected moves during that of the Japanese session is as per that of the derivation of the algorithm. Then European session, a quick drop could happen during that early European session, and then rise could happen during that of the late European session, and swing and rise could be seen as a weak beginning false move or rise for today. And tomorrow again you could come across the opening low, slightly open it lower and started gaining the levels during the day. And then you will find the weak beginning false move of rise might be over. Then afterwards from Wednesday onwards, before the FOMC rate decisions, they are expected to open it slightly lower and start making a little bit of volatile move, and then wide range swings during the time of announcement of the FOMC, and then you will find there are good corrections in the case of Euro and GBP. Probably they could set the trend during that time. Still, it is the last week of the month from 25th to 29th. So keep in mind that they will bring in volatile moves during the last week of the month and the first week of the month. So during this time, they could make an extended upward stop and before making further rise. And so this is the expectations from that of the algorithm. So next month they are expected to drop Euro and GBP. But I will read the market on a daily basis and try to give you whether they are going to bring in a trend reversal or sideways move and further rise during the course of the next month. So I have given you the algorithm based forecast that could be a slide in the case of Euro and GBP, but still based on the market reading, I will try to fine tune and give you the forecast during this particular week as well as next week on a daily basis. Then probably we will see whether they are going to bring in a big trend reversal move of about 1000 pips or they are going to bring in a sideways move. Last month also I was expecting a downward fall before making further rise, but they started making the sideways moves. So I read it and corrected the algorithm based forecast and started explaining to you what could be the possible moves in the market. Similarly, I'll try to modify it so that it will be able to really help you. Instead of giving the forecast alone, I will also add up the market reading and try to fine tune the forecast and try to explain to you what could be the possible moves on a daily basis and in the coming days. So whenever they make an extended upward stop and like what they have done it in the case of Euro today, you would have noticed that from 1.4550 they just made a dip and then quickly made a rise above that of the high, and within 30 minutes they dropped from that of dropped all the way there from that of the high to about 1.2540 level. So about 60 pips gain and the drop, they have done it for the week beginning. But an extended stop end will be for about 150 pips in the case of Euro and 250 pips in the case of GBP or the potencies. So we have to see when they make such moves, then afterwards they will continue to drop. So that you have to keep it in mind. So whether I explain it or not in the blog or in the webinar, you also look for it so that you will be able to understand that okay, they have made a big rise and the drop, so they want to drop further down. Understand the trend is set on the downside, then trade accordingly. So first of all, if you understand the market moves, what could be the next scenario in the market, then it will be easy for you to take trading decisions. Now with regard to the initial lows and the highs, Euro formed the initial low 1.4526, which is intact. 1.4604 is also the high. They set it around 1 GMT, and that is also intact. And in the case of GBP, 1.6492 is the low, which is not breached. 1.6550 is the high, which is also intact. Then in the case of CHF, 8832 and 8873 are not breached. And yen also 8180, 8141. They are not being breached. So the market is making lackluster moves. Then Australian dollar 1.0713 is the low and 1.0774 is the high. They are also not breached. And Canadian dollar 95.21, that they have breached and formed 95.19 as the new low and 95.40 as the high. That is not been breached. So in order to make the contrarian move, negative net change in the case of Australian dollar, negative net change in the case of Canadian dollar, they made the CHF a downward stop, and now you find Australian dollar has come to that of the positive territory by 2 pips, but still they have to sustain it. And also Canadian dollar, if it holds below that of 95.21 for more than 30 minutes, then they could make an extended downward move for 2 hours. So always try to identify the type of moves they make in the market that will help you to take trading decisions, rather than simply looking into the level and simply looking into that of the higher lows and the higher highs. You know that so many times they make higher lows and the higher highs, and later on they reverse it. So people get struck only during that of such reversal time. So give importance to that of the timings as well. So the timings I have given you, that during the early and the late sessions of every session, Japanese, European and US session, they will try to handle the majors, and during that of the mid sessions, they will try to handle the crosses. So if you are trading in crosses, wait for the mid sessions to come and then try to initiate a buy or book profit, etc. Similarly, if you are trading in majors, try to focus only during that of the session start time and the session close time. The rest of the time you can just keep aside or simply watch the market. That way you will be able to improve your trading ideas, and that will give you a profitable situation. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over that of the live market code page for us to track during our discussion time. In Raj. Also the coming Friday and Monday is also bank holiday, 29th and 2nd. Yeah, May Day situations. So we need to see how they are going to handle it. Now, Robert, do the players themselves understand and communicate by that of the timing, such as holding below initial low for more? Yeah, they do have effective communication methods, but I cannot divulge it here. And they don't use the conventional method of communications, because that can be tracked and that can become an evidence against them. And insider trading is not permitted in any market, very well. Kannan. Extended stop end in Aussie is expected today or tomorrow. Yeah, during this particular time frame, before Wednesday, anytime they could be able to do it. And probably in a holiday thin market, they may not do it today. Most likely, they could do it tomorrow during that of the early European session or late US session. These are all the potencies as far as tomorrow. And see, we will also track it on Wednesday, how exactly. If they are not doing it today and tomorrow, then most likely they could do it on Wednesday, and that could be during that of the FOMC rate decision time. So then it will be very, very crucial time, and they could do it very fast. And in case many of the people are waiting to commit the positions after the FOMC, then they will try to make an extended stop and induce the traders to commit the positions wrongly, then reverse and simply make the downward move. So during such time of making an extended stop, and you know that on the earlier occasions they have made a move of about 300 pips between the low and the high in the case of euro, or about 400 to 500 pips in the case of GBP between the low and the high. That sort of moves they are expected to make, and that will be the indication of trend reversal. That is, they could gain about 150 pips from that of the opening level and the net change, and within a matter of 30 minutes to 1 hour, depending upon the volume, they will try to reverse and make 150 pips negative net change. So their net change like this could suddenly become 150 pips positive net change, and in a few minutes or within an hour, they could show it as a negative net change of 150 pips. Then people will say, such a big move happened in the market, and they will get stunned instead of understanding what the players are trying to do. Immediately understand next pullback, try to take sell positions in them. Or if you have already taken the sell position during the extended stop and when they make it, and you know very well quick moves or false moves in the market, whenever they, not like holding like this, whenever they make a very quick aggressive move or a spike, understand, they are simply gaining the levels to book profit of their buy positions. A typical example will be silver. Then, what do you think about USD CHF and USD CAD? They are expected to gain the levels. They are doing the lower level consolidation in them, and during such spike times, they will quickly gain the levels without making dips or moves. Only in the case of Euro and GBP, they will make the dips or moves. Any one currency, they could do it in order to create the sentiment. The rest of the currencies will move the other way. That will also indicate you that they are doing that extended stop and 99% of the occasions during trend reversals, I have noticed that they make extended stop and before making the reversal. Then M drive. During such big upward move, it is, I am not able to take sell positions as the move is very quick and spread extremely high, or the spread can be about 150 pips from that of the net change. So net change is 9. So probably on a daily basis you can keep 150 pips above that of the market. You can on sell limit order. Similarly, so they may not do it in the case of, already they have done it in the denominator currencies, only in Euro and GBP. But in the case of GBP, they could hold high and they may not reverse it so quickly, but Euro they could do it. And at that time, don't immediately sell. They will do one consolidation and make one upward stop and then drop. At the time, you can sell. Probably they could gain to about 1.67 or so, then watch and sell. And whenever they show the high, they will not sustain such highs for more than 10 to 15 minutes. A psychological level like 1.46. When they probably during the early Japanese session, you would have noticed that they just went above that of 1.46, and within about 10 minutes they came down, and then within 30 minutes they dropped straight away. So that sort of moves are expected. At that time, try to take a sell, and if you are afraid, then try to keep stop. For 20 pips or 15 pips and things like that, immediately keep stop at entry. And if you want to participate in such extreme moves in the market, for that you should have adequate equity, and also you should be able to handle the positions carefully and understand that the platform might give some constraints during such times. They may not give a definite fill for you. So these are all your local problems that also you should be able to tackle. So if you simply think about the levels, then you fail to forget about your local problems, what you might face with regard to the platforms. So they could give a slippage and they will ask, they may give a report or simply they don't fill when you have kept the stops in the gaps and things like that. So that you should be able to address by yourself, because I will not be able to tell you, because every platform they have got their own tactics of grabbing the money from that of the traders, their own traders. Then NASCO. Do you expect USD CAD and Australian dollar to perform a similar way or reverse around the same time? Yeah, they will. I had given explanation, I think the earlier occasion. They do the sequential trend reversals. So during such sequential trend reversals, you will find that they will make a nominal upward stop and things like that reverse in the case of Australian dollar and also in the case of Canadian dollar. Then afterwards, you will come across a brief upward stop and or a downward stop and make the reversal in the case of yen crosses. They may not make extended upward stop or a downward stop. And only thing, the currencies which make the upward stop or the downward stop are euro and GBP. Once they do it, then you will find the entire market will reverse, and finally, as a follow-up, the European crosses will also reverse. They will not make extended stop and move. Only euro and GBP, where the volume is relatively high, and there the traders may not be holding one-sided positions. Either side they will hold the position. Some traders might be holding buy positions, some might be holding sell positions, and then they need to necessarily do the extended stop. Whereas in the case of the denominator currencies in the commodity pairs, most of the occasions you find predominant of the traders take one-sided positions. And they know some traders might be taking the contrarian positions, like when they gain, they take a sell positions, and for that a stop is enough. They will be able to achieve it. Then, so it is always sequential trend reversal. They will take a time frame of about 1 week, or when the volume is very good, they will take about 3 days to do the reversal in all currencies. So at that time, once you understand the reversal, then try to take during pullbacks the sell and buy trade. Then Shukul Rag, you say about rising commodity. Yeah, they are making this gap opening and that upward move quickly in a thin volume condition in the case of gold and silver. Now they wanted to reverse it. That is why they quickly gain the levels and offload for about $10 to $12 straight away and say that the profit booking has eroded the gains, or whatever explanation. That will be a postmortem, simply a market comment. But at the time of rising, everybody will say that market appears bullish. It could go to 50. In the case of silver or gold, can go about 1550, or now probably some people may say even that it will go to 1600 levels. Then M-Trial, I mean buy and sell spread. Instead of 3 pips, they rise it to 30 pips. No. Buy and sell spread. See, between the buy and the sell, some platforms may give 2 pips, or some may give 1 pip even, some may give about 3 pips, 5 pips, etc. That I am not talking about. So what I am explaining is with regard to the extended stop end, they quickly gain, say for example, when they are trading around 1.4570, within a matter of about 10-15 minutes, they will show 1.46670. And then about 10 to 15 minutes later, they will again show 1.4570. Quick up stop and then drop. That is extended move. And also, with regard to the spread, some platform, they may not rise the bid, or they may rise the ask might go up, and the bid may be simply holding it. So what happens, when the ask again goes up, you can only buy at a higher level. But if you want to sell, they will give about 25 to 30 pips spread between the bid and the ask, and they will say that the market has not traded in those areas. So we are not in a position to give you a definite fill. That is what. That is a platform problem. Some platform address to it, some they simply say it's a gap, and See, basically these are all being done by the banks, and the banks have got specific type of orders, and those orders a higher level buy, they will place it, but it will be expecting only a corresponding order of the same quantity in the opposite level. So a single order. So that will not be appearing in the market. Like say for example, they will simply keep a buy order 1.4660 in the case of Euro when it is trading around 1.4560 or 70 as 20,000 lots buy. So only if there is a 20,000 lot equivalent sell above that or below that, that will get filled, or around that will get filled. And the rest of the orders like 1 lot, 2 lots, they will not get filled. Then the platform simply say that there is a gap and we are not able to give you a definite fill. Then the psychological levels are every 100 pips, no, every 25 pips is a psychological level. Rom, will UK and US session be there today? Yes. US, there's going to be a data release. UK it is a holiday, and also in Europe. So still the Japanese market is open. So there will be some sort of moves during the day, I suppose. Even on Friday, when majority of the markets are closed and many of the platforms are closed, still the moves were seen. In Bong, you did not give weekly forecast in FX Street. No, I don't give weekly forecast on every week, and I give it only in the webinar, the weekly forecast. And today's webinar is being recorded, and that will be displayed. And with regard to the calls, what they have made, last week I did not have time to fill it, and this week, so this week I'll start giving it. The levels with regard to weekly focus. Yeah, now I understand. The NASCO. Why do you see Euro and GBP to reverse last? And commodities are usually the last to start going down. Can you comment? Okay. No. See, there is no hard and fast rule and things like that. That is the way the players handle it. So I can only just say what they are trying to do it by making a market reading. And I will not be able to justify with any sort of reason for that. Okay. So, and similarly with regard to the market timings, all those things, I identified how exactly the players are doing it in the market. So I am only revealing the hidden secrets to a certain extent. And so I don't have any logical derivations for such things, why they are doing a sequential trend reversals, things like that. But I have done the study for the past 13 years, and they do it in a very similar way. The type of moves, see, I've been explaining it from 1998 and identified everything in 1999, 2000, and before that also, I made an extended study and made the backtesting and started explaining to that of the people and those who have been taking training from me. I explained it with some more information. Still, they have not changed it. I am surprised, really. So probably that is the only method they can do it. That is why they have not changed it. Then weekly forecast, as I explained. Can you comment on silver? Silver, they are making an extended upward stop and now to drop it. And it will be fear creating, and only those who have got adequate usable margin can take positions, because they will make the moves very aggressive, and it can only induce the traders who have got already the sell positions to go in for a short covering because of the margin erosion, and they will say there is an acute demand for silver, so silver could touch even $100 and things like that. So when they make such a big cry using the media like TV, websites, everywhere, and everybody will be liberally posting it, so it can go to $70, some might say $90, some might say even can cross $100, probably it can outbid gold and things like that, and some may make a methodical analysis. See, in 1992, gold was at this level and silver was this. So the appreciation in the gold was phenomenal when compared to that of gold. When all such analyses are being done, then which will add only fuel to that of the fear. Already the traders who have got the sell positions and they do a distress short covering and later on repent. So this is not the first occasion. Every time it happens, those who are holding unfavorable position, they get out of the market, then you find the market reverses. So there is a saying in the market, the strongest bull, when it turns bearish, the market reverses. Then doctor, or you use the live market quote page all the time, when do you think it exit order will appear? Yes, I use only the live market quote page. I stopped using the charts. I stopped using all the conventional analysis. I do statistical analysis with regard to my algorithm, and it is not the conventional analysis. It is similar to that of cluster analysis, taking into consideration. See, in statistics, we have a method of taking only two parameters at a given time and doing an analysis. But if you try to take a multiple component and try to do an analysis, it is something different. So invariably you find in a chart you come across the time frame, which is along that of the x-axis, and you come across the level. So the time you take it as an intervals like 30 minutes or 5 minutes chart, 30 minutes chart, 1 hour chart, 4 hour charts, etc. And that is a fixed parameter, and the movable parameter, namely the levels. So since it is fixed parameter, you find the movable parameters are to be given importance. So you are, without your knowledge, try to focus on that of the levels. Then it becomes a surprise for you when the market reverses. Whereas if you give importance to that of the timings as well as that of the levels, without any bias, then you will be able to understand how exactly the chart is going to be curvilinear. It is not a straight line. It will be making up and down moves. That's what later on you realize. But at the time of rising, you don't know when exactly the reversal is going to happen. So you try to study it with the help of the moving averages and convergence and divergence, MACD, etc. There again, which indicates only after, but invariably you find that it happens to be a crucial point where you fail to take appropriate decisions. So if you want to know beforehand, then we obviously give more importance to that of the time study rather than that of the level study. Then once the time is being identified, then look for the levels to take positions. That is how I approach to it. So probably during that of the coming Friday, Tracking the Forex Market Together webinar, I'll explain to you how exactly the time study helps us. Rather than simply taking positions, I'm going to explain how exactly the chart study gives us the limitations. So it is not against any technical analysis. I am just taking you one step further to understand that there are advantages and there are limitations with regard to the conventional studies. Then can we expect Euro, GBP and Australian dollar to go up? Today and tomorrow they have got the chance to go up. So the mid-session is how much time? See, the early session is 1.5 hours from the start of the session. The session timings, I explained it earlier in the blog also. They are given. Please search for the timings, you will find it. And in the earlier recorded webinars in March, I have given it. What are the timings? End of March, if you see, you will find the timings are being explained, and probably you can make use of it. Then Raj, I was watching the live market quote page yesterday to see if the players are showing high levels orders, but none appeared. So it be by chance only. Yeah? Obviously, there is no necessity, or there is no hard and fast rule that they have to necessarily make an upward stop, and unless and otherwise there are stops above. They have got a purpose. So you identify the time during that there is a potency for an upward stop, and and then try to see whether they are doing an upward stop or just go up to that other high or just flatly hold it. So that you have to identify during those time frames. So that is how we have to give importance to that other time, rather than endlessly watching the market without any clue. So I'll come back to that of the PowerPoint presentation now. The questions are over. So the expected market moves for the today. If the volume is optimal, then you come across the higher level opening has already happened. Then swing and slide moves are expected in Euro and GBP. Then a quick drop during early European session and a rise during late European session. And swing and rise could be seen during that of the US session after the US data release. And the week beginning false move or a rise could happen for 2 days because the last week of the month, understand, last week of the month and the first week of the next month, they bring in trend reversal. And you come across on 27th an important decision making, namely FOMC rate decisions, and people will, or the players will try to derive the clues out of that or some exaggerations out of that and say that, okay, US dollar is expected to gain, and simply start dropping. But they will do the drop very quickly first, and following drop will happen. And then you find the trend is set. After about 400, 500 pips drop, then all the analysts will say that the market is in the downtrend. Okay, so, and somebody asked about the market timing, so I just display the market timings. So 0030 is the Japanese session. So up to 1:30 GMT is the early session. 7 GMT is the late session. And so from 5:30 to 7 GMT is the late session. So that is how. Then European session 7:30 up to 9 GMT is the early session. And from 11:30 to 13 is the late session. So that way you can identify the early and the late sessions. So I take this opportunity to thank everybody who have come here to listen to my webinar, and tomorrow again I'll come back and take up another Asian session live market analysis, and carefully trade during this time, and don't commit wrongly or otherwise keep aside if the equity is not adequate, and don't blame me afterwards, because invariably the traders take positions, and when they make such big volatile moves, then the only scapegoat is me, so they try to attack me in the blog. But by that they don't gain anything, probably they just let out their feelings. So I request you to trade wisely. Take very less position during this time and don't look for position trade during this particular 2 weeks. Trade wisely and earn from that other market. Be a smart trader and try to outbeat the players. It is not the equity which is important, it is the question of intelligence which is important to outbeat the players. So thank you one and all. See you tomorrow.